Hi guys, welcome to my channel. I'm Felix, your favorite tutor, and we're gonna be doing this, right? So by now, I'm expecting that if you're listening to this recording, you have listened to Learning Unit 1, you have listened to Learning Unit 2. If you haven't, please start there so that you won't be confused, because what we are doing here is just a build up from what we started or where we started at. So please do yourself a favor, go through Learning Unit 1, go through Learning Unit 2, also go through some other videos that I also mentioned that you have to go through so that we make this journey a bit shorter. Depreciation, this in Learning Unit 3, they want us to talk about inventory, and they want us to talk about depreciation, they want us to talk about VAT, they want us to talk about bank reconciliation. So the beautiful part about it, I already have a video on depreciation, I already have a video on VAT, and I already have a video on bank reconciliation. So those three chapters, I would rather refer you to my previous video so that you can watch that video and get as much help as you can from that video, and then we can continue and proceed. So when you're talking about inventory, right, when you're talking about inventory, there is something that you just have to understand. So they came up with an inventory cycle which is summarized as follows: the purchase of goods, the cost of goods, inventory, purchase for cash, inventory held at the business until it's sold, the sale, and everything. So it's fine. That diagram that they have there is fine. They're naming it an inventory cycle, which is also fine. Take your time, look at it. It's also fine. But one thing that you have to understand are the systems which are used to hold this inventory. So the first system that they talk about there is your periodic inventory system. So in this periodic inventory system, it's from the word period, right? It's usually there for a certain period, for periodic goods. Say you're selling vegetables, you're selling things that are sold within a period, which are not like seasonal products. You can use this method of control or controlling things, because the things that you're trying to control, they are not there for the entire season. So it makes sense for you to adopt a periodic way or a periodic system of controlling your inventory. So the key things that you have to understand with the periodic system is you don't use the inventory account. You recognize inventory as a purchase, right? And purchase is also an expense account. It is very important because they might give you a question where they are saying blah 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 uses periodic. Then they give you amongst your options, they are saying inventory. Please remember, if it's periodic, you use the purchases account. Or the transactions happen in the purchases account. Yes, they still happen on the debit side because purchases account is treated as an expense. Moving right along. So how then do you calculate your cost of sales, or your cost of sales under the periodic? That is the major question that we will be looking to to answer, right? We'll be looking to answer, because if you see the way that they did it in your study guide, they didn't also finish the calculation. So this entire calculation that you have in front of you, it is to calculate the cost of sales, because cost of sales is only calculated at the end of the period. That is the major difference between this one and the other one that we talk about. Cost of sales is calculated at the end of the period. So the beginning, they're saying we have the cost price of inventory at the beginning of the year is going to be given. If you're going to be buying inventory, then you add the cost of that inventory. Then whatever you've added, you then less the cost at the end, which is determined via a physical count, meaning you do a physical stock take. After the physical stock take, it then gives you an amount, then you less it from that, then you're given what you call cost of sales. So immediately from the periodic, they jump. That's why you are here, because some of these things are a bit confusing. So the opposite of a periodic system is a perpetual system. So a perpetual system means continuous, meaning things are going to be stored continuously. This is a system which is very efficient in controlling goods. Let's say your electronics. People are buying phones in January, people are buying phones in December. Cars, people are buying cars in January, people are buying cars in December. So all those goods that are not periodic, they are usually controlled by this continuous system, right? Usually it is a continuous, it keeps things going on. Then it is a computerized accounting system, and the products have barcodes. So usually they'll be using barcodes. So you need to know those keywords, right? It's a computerized system. There will be barcodes in place, and you don't really need to have a stock count at the end, meaning the moment you make a sale, you can calculate your cost of sale immediately. Then on the other hand, this one is now saying it will only have accurate records periodically. So you only know what's going on with your stock at the end after doing your physical stock take, right? So all the records will be accurate once the stock take is done. That is the periodic. So I highlight those major differences because they are going to ask you to differentiate between the two. Then from then onwards, we have like a breakdown, which is talking about the periodic inventory system, the advantages, the disadvantages. Please, it's an important page. Make sure you understand it, right? Make sure you understand the advantages which are as aligned to one, and the disadvantages of the periodic system. They're going to talk about the formula there, right? Opening inventory plus your purchases plus your sales returns, purchase returns, blah, blah, blah. Just know that calculation. You don't really need to get into depth with it because you won't be tested much in it because the thing that you're doing, you are not really too deep into the inventory things. But yeah, that page, you just have to understand what is going on. They have beautiful examples for you to go through. Do go through those examples. You're doing yourself a favor. Do go through those examples. If you then get stuck somewhere on those examples, do reach out. I'll be able to respond on your comment and try to answer or try to explain. By now, I'm sure you've done double entry and you're comfortable with what is happening here. Debit side, credit side, debit side, credit side. I made a lot of videos on that. I really wish you'd go and see that. Another thing that they're going to be talking about, they're talking about the perpetual inventory system. I think it's around 11th page. The perpetual inventory system, they are now giving you, it's a continuous. So the major difference between the periodic and the perpetual is a continuous system, right? It is going to come with its advantages, which is they are saying there's greater control over inventory, provides real-time information, reduces the need for physical counts. Those are advantages. The disadvantages, it is expensive to implement and time-consuming to keep. So you just have to know the advantages and disadvantages, but you are going to be tested on there, right? On there. Then they go on to talk about the inventory valuation method. First in, first out simply means, or the FIFO. FIFO simply means what you buy first, you sell first. What you buy last, you sell last. So basically that is first in, first out. Last in, last out, LIFO. What you buy last, you sell first, but it is not practical in real life. So don't really crack your head about it. It's not important. Weighted average method, you then add up all the cost of your inventory. Let's say, for instance, you buy a dress for 10 rand, you buy another one for 15, you buy the third one for 20. So you then add up all of it, then you divide by 3 to find the average. So that average that you find becomes your cost for those dresses, right? Which is under the weighted average method, When you find time, try to also go for that example 3.2. It is very good for you to test your knowledge on the weighted average method, or the first in, first out. It's the first in, first out method, because it has a lot. It really has a lot. And if you do struggle, please do drop a comment. I'll respond to your comments and make sure that everyone gets a clear understanding. Markup on cost, right? Markup on cost is your profit, right? You're going to be buying something. Let's say you buy a laptop for 1,000. It makes no sense for you to sell that laptop at 1,000 as well. You have to sell that laptop at a price that is also going to give you a profit. I'm saying you're buying and selling laptops, not to buy and then you use then sell. No, you're buying and selling, right? You're in the business of buying and selling. You buy a product, you have to sell it at a price which is higher than the price that you bought it for. That's the only way you can realize profit out of an event or out of an act of buying, right? So that difference now that you add on top becomes your markup. So that's what they're talking about here. They have a cost price, which is the buying price of 10,000. They have a profit margin, meaning they want to make at least 5,000 from that sale. That's why they have that 5,000. And meaning they are now going to have to sell that product for 15,000 so that they can make the 5. So you then do the division, and it's a very important formula that they give you there that you have to keep in mind, right? Selling price, if you want to find the cost price, you can just simply say selling price times 100 plus 100 over markup. So to simply explain this to you, remember, if you now have a selling price, you have taken your cost, then you have added your markup on top, meaning that 15,000 that you are seeing, it's actually 150%. It's not 100%. Your selling price is going to be your 100%, which is the cost, plus your markup that you're going to add on top. So for the example that they gave at the top there, that 15,000, it's referring to 150%. So if you want 100% of 150%, because your cost is always 100%. So if you then want the 100%, you just simply have to say 100 multiplied by the selling price divided by your 150. For the example that they gave you, they have a cost price of 12,000, then they have a profit of 2,000, then they have the selling price of 12,000 from 10,000, then they have the selling price of 12,000. Yes. So they are saying to you, cost is always going to be how much? Cost is always going to be at 100%. You take your cost at 100%, multiply it, you then add your markup, then you get to a selling price of 120%. So if you then want to go on and calculate, okay, what is the cost? You then have to set your selling price of 12,000 multiplied by 100 divided by 120. So it's an important element. It's an important thing to study for yourself. So if you want to calculate the sales price, it's also the selling price. It's also simple. You just have to say your cost price. Then you take whatever cost price you have multiplied by the markup percentage. Then you add the two. They will give you your selling price. So you just have to be able to calculate them. Your lecturers are enjoying sending these in assignments, so please make sure you understand what they're talking about there. Markup on cost, right? Markup on cost is what are you adding on top of your cost. What are you adding on top of your cost in order for you to get to the price that you are at? What did you add on top of that cost? That's what they're talking about. There is in markup in cost. So you need to know those formulas, because it's going to come a similar formula when you talk about VAT. But the moment that you know that formula about markup on cost, then you should be good. You should be good. They have examples there where they want you to record things in perpetual inventory system. They have examples there where they want you to record things in periodic inventory system. Do yourself a favor, go through them and make sure that you understand them and you understand them thoroughly. So if you're interested in inventory, I think you should stop the recording now. But if you still want to continue, depreciation, I've already talked about it. I have videos on depreciation. Please do visit those videos. They will explain everything about depreciation, the methodologies that are there, the reducing balance method, the what have you, then they have schematics on it and everything. I oversimplified depreciation. Please do visit those videos. They will be very much helpful. Value-added tax, I also have videos on value-added tax. Right, I also had videos on value-added tax. So the calculation part about the input output, I have it, and you can visit those videos and you'll be able to understand what is going on there. What you need to know for the purposes of your studies, you need to also understand what is the requirements for the registration, right? What is the requirements for the registration? What is VAT output? What is VAT input? I have a video on that, right? Then the different types of supplies, you can go through it. It's just a theory dump that you just have to go through. I won't really reread theory. It's in front of you. You can just read and understand what they will be talking about there. What is a VAT vendor and what will be happening there? Value the tax. Please do go through my channel. You will find videos which are there which will talk to you about VAT. It's not a complicated subject. It's not a complicated, complex subject at all. Bank reconciliation statement. I have a video on bank reconciliation statement. I will need you to go there and watch that video on bank reconciliation statement. It is very simple. It will simplify everything for you. If you have a question, do let me know, but I already have videos for bank recon as well. So please, let's not redo the things that we have done. I will put the description of the links to those videos that I've done in the description box, so that you can be able to just access that video and just watch it for yourself. But I've already made videos, and I'm not going to make videos on something that I've already made before. It will not make sense. Plus, it will just be a repetition, which is not going to be very much beneficial to you. So again, guys, I thank you so much for your time. Thank you so much for spending time and spending your time with me here. Remember to subscribe, and do yourself a favor. When you go through the stuff with me, make sure you have your learning unit study guide in front of you. Otherwise, it is going to be just me repeating myself in front of your ears, and when it comes to test time, you won't understand a thing. So please do yourself the kindness. Make sure that you have what is required, which is the book, the study guide. Have the study guide in front of you. Have the study guide in front of you before you tune in to any video that I'll be doing. But I'm expecting you to start from chapter video 1, 2, 3, and we continue on getting this thing the way we do. Unfortunately, I can't put up the book. Because it's a property of UNISA, and I will attract copyright issues because of copies of or parts of that book. But I would have to thank you so much for taking your time. Like, subscribe, invite a friend, share. Thank you.